Coming back with you with another recap here, September 23rd, 2020. What an amazing day. I mean, if you didn't see this, time to study up. So this is SPI Energy. So this stock was trading at 97 cents. Look at the top of my mouse here. 22nd of September, 97 cents. 23rd of September, $46. 97 cents, $46. That's 4,000 plus percent move in one day. So lots of lessons to take away from this. Let's go back to our watch list and talk about that first. So this is something we alerted. You can go back and look at our watch list. It was time stamped at 9:14 a.m. We posted this to our group and to our page, and SPI was the number one stock we're talking about. And what do we say? We said the most likely it's going to dump in the morning prior to finding an area of meaningful support, but we'll also consider the morning spike if there are enough buyers. Okay, so what did we see to begin with? Well, if you come here and take a look at the news releases on SPI, you see that at 3:58 a.m., SPI Energy launches new electric vehicle company subsidiary. So basically, they're launching a new EV company, and this is the market we're in, right? Like we're entering this new kind of world where a lot of uncertainties. So are we turning away from oil? Are we not turning away from oil? What's going on? And EVs have just been absolutely hot, especially with Tesla exploding the way it has all summer. So yeah, SPI, to no surprise, ran just insanely well. And what a clean pattern. For the most of the part, very clean chart pattern. And then again at 8:18 a.m., they have the pre-market launch of talking about how how hot the stock is, and already it was up almost 300%. So we were alerting it here at 9:14. You can look at our watch list and take a look and see what we're saying about it. And what were we seeing? Well, we were seeing that this is already gapped up. So this was in the ones and it gapped up to the threes, and we were expecting your typical style where these stocks, they gap up, they dip, and then they find consolidation, and then they kind of go. The typical dip and rip strategy. Okay, and looks like that did not really happen to the effect that we were looking. I mean, yeah, it opened up here in the was it the 350s, and it kind of held 340s, 330s, but think about yourself. Let's say if you were in the stock overnight at 97 cents, I mean, you'd probably be getting out for a profit the moment the market opened up as well, right? So the fact that this thing is not tanking should indicate that no matter how much selling pressure there may exist from all the people that are trying to get out for a profit, there obviously exists enough buyers to keep this up. And it wasn't until 10:16 where this thing finally had its ramp up. So your standard delayed morning spike, which is a really important phenomenon to understand. Morning spikes usually happen when there is demand right at the get-go. These delayed morning spikes can typically happen because there's a lot of profit takers that are selling their stock, and it takes a little bit of time for the buyers to come in and actually help the stock spike. But finally, that happened at 10:16, and I mean, what a run up! I mean, basically, you had to move from the fours all the way up to like the nines, and then pulled back a little bit. People were getting a little bit nervous about it right here. If you go through the Twitter feeds, a lot of people thought this was the end, especially on this red candle right here. They all were calling this stock a rug pull, which I can understand why. But yet again, another massive push from the nines, or I guess the sevens and eights, to the 13s. Another consolidation, another push, another consolidation, another push, and then we started getting into halt land here, where basically the stocks are getting halted because they're just too volatile, right? And I think there's a pretty good halt here for almost 30, 40 minutes, and it looks like that was the beginning of the end before the stock kind of trickled off. And you know what? I don't know anything about SPI. I don't really know who they are, what they do outside of electrical vehicles, and it doesn't matter. And that's what's beautiful about this. Stock trading does not have to be about doing the fundamental research and looking at the ledgers and the cash balance sheets and all that. It doesn't matter. It's so easy to trade stocks when you are a technical based trader. Okay, so something else that you've got to take away from SPI is that, so today we were trying to see if there's any shares available to short, because at face value, this thing should have dipped. And to no surprise, there was no shares available to short. So what should that tell you? That should tell you that anybody who was shorting the stock had already had their shares in their hand. They had already reserved it. So there was obviously a high level of interest to short the stock. So when a lot of people are shorting the stock, and contrary to the shorts, the stock starts going up, what does that create? Your massive short squeeze. Okay, all of them got crushed, and that's why you have a stock that can go all the way from the 3s to the 40s. Okay, everybody who had shares to short probably got too excited too soon, and a lot of them trying to pump the stock a little bit to kind of scare people here when it was consolidating, and again to start selling off some pressure. But more buyers came in and pushed the shorts up even further. Okay, so there is absolutely something to consider here. Maybe the shorts are the next wave of pumpers, right? They're getting in too early on these stocks, and we're still in a hot market. Even though it's choppy, it's a really hot market. And you get these moves right here. Okay, so very important to understand the dynamics about the shorts. The other thing to understand as well is one of the number one rules we talk about in order to buy these breakouts is you need 60 minutes of consolidation. 60 minutes of consolidation is a bulletproof way of trading breakouts. It doesn't mean it's going to work every time, but it increases your odds. And you can see that happening so many different times. So really, the consolidation would have started here at 820 and all the way until 1020 when it finally pushed out past that resistance, right? So this is almost 2 hours. And then again from 1020 to about 11, I guess just shy of 60 minutes, but then another push. And then from 11:30 all the way to 12:50, so this is for sure more than an hour. Then you got the second kind of push right here, and now you're kind of entering this crazy land where this stock's just going pure into the moon. So there's really no consolidation to play off of here. But multiple places, you have one consolidation from pre-market to this spike, from this spike to this spike, you have another area of consolidation, and then from this spike to this spike, you have another area of an hour consolidation. And what an easy buy, okay? So we basically show you all of our trades. Of course, we're not going to out our entire order ID numbers and our account numbers. We got to have some privacy, but we show you how we trade. This is all of our entries and exits today. Okay, so let's take a look at it. So SPI, our first entry was at 4:30 at 10:43 a.m. So let's take a look and see what that looked like. 10:43 will be somewhere here. Right here at 10:43. We entered at 4:30, so it would have been this candle right here, just this little wick. Yeah, we got filled right here, I guess, between this time frame. And what were we looking for? Well, this was finally the first time that after the stock had kind of broken the trend and crashed down here, it was finally starting to break out again. And what do I mean by that? Is if you see the resistance here that was in the 438s. And at 10:43, 10:44 time range, we finally got filled. This was finally breaking out this previous resistance, so that was the place to run up. And we sold fairly quickly after that as well. I think it was 10:47. 10:48 we were out half our shares, and 10:51 we were out the remaining half. So 465 and 456. So yeah, so right here we were out in the 460s, and a few minutes later in the 450s. So sold into strength, started reversing. Again, we don't know if this thing's going to be the beginning of the crash, right? So take safe profits and let it do its thing. And it wasn't until it started running up later on where there was another place to buy. And of course, we were busy with our clients at that point, so we weren't really able to capitalize on this one. But there was another area that we were trading this. Let's take a look at it. It was around noontime. Yeah, so 12:16. So we actually got in for a little bit of a loss here. This was a really good lesson on how quickly these stocks can move and how not to get emotional and how you've got to cut your losses quickly. Of course, you can see our position size was quite a bit smaller because at $7 a share, we're chasing the stock. Really, we're not at our optimal entry. So a really good way to manage position size is to reduce the risk, and we can do that by reducing the amount of money we're putting into the stock. Okay, so 500 shares at a higher price point, 790 out at 713. This happened between 1260 and 1239. And you know, a really good lesson here. 1260 and 1239. Yeah, so somewhere in here. Yeah, so we got caught in this dip right here. Right here, as you see this, this thing was up in the 850s and we had an order in the 790s trying to kind of get caught by the wave of stop losses. Looks like the wave of stop losses had other ideas. It had ideas to go all the way down to the 7s. But anyway, we held through that because typically something like this, you're going to have a rebound. And the rebound ended up being more of a consolidation. And it wasn't until this dip right here where honestly we got faked out. I mean, this looked to us like this was going to take out the previous support, and it really did. So we got out here in the 721, I think, near the bottom. Horrible exit, absolutely horrible exit, but rather safe than sorry, okay, because this could have been the beginning of the end. But it wasn't. And it wasn't until a few minutes afterwards we were like, you know what? This stock really has room to run. And we saw that at what price point right here? It was at at 1246. So about 7 minutes after we got out for a loss, we entered again at $8 a share. And there was something pragmatically different about our entry here versus our entry here. And let's see if you can spot that. Just to kind of recap, that was at 1246. Yeah, so somewhere here, 1246. Yeah. So once again, when this thing started ramping up here at 1246, we entered at $8 a share, right at the bottom of this candle. Really nice entry. And what did we see? What was so different about this versus this? Well, first of all, this thing was consolidating. It had low volume. So it was honestly a little bit of a speculative entry and probably a bad trade by us because we were a little bit, I don't know, almost riding off the hype of having made a bit of profits on the initial trade. So this is how easy it is for the psyche to be affected, right? So we got back into it, not really sure. It was almost like a 50-50 setup. Of course, these 50-50 setups have the highest risk rewards, but it was easy to get faked out as well. Where finally at 1246, we had this right here. I'll draw it for you right here. There's something different about what you see in this line and what you see in this line. If you can spot it, it's pretty straightforward. We had an uptrending stock. So when there was finally a sign of having an uptrending stock, we decided that, you know what, this probably has legs to run. Combine volume with that, combine good news, combine the fact that Twitter is blowing up, everyone's going nuts about the stock, and combine the fact that this is, I guess it's kind of off the screen here, but you can look it up yourself. It's a low float stock. It only has 8 million shares outstanding available for the public to trade. And it already turned, I think by that point, hundreds of millions of shares. So it was ready to run. It was ready to go. So we felt that this was a good place to enter. And I mean, what a ramp up. We sold a few minutes later in the 960s. What time was it that we got out at? At 1250. So 4 minutes later, I got out here. So enter at 1246 and 1251. Yeah, up here, 960s. Yeah, so got out here in 960s. Very small, just captured an epsilon of the move. And look at what was available to us. Right? I mean, we could have just held here from the 4s and sold in the 40s. But again, nobody knows how high these stocks go. You can speculate, you can gamble, but you can't know with certainty that this is going to be a 4,000% mover. But this is the market we are in. So it's very important to respect that and stick to your rules. And I think, you know, we stuck to our rules here too. Like, you know, we cut our losses the moment this thing went against us. So I still count this as an excellent trade because we didn't get emotional and hold and hope. The moment it went against us, we got out. And the moment it flipped on us and showed that this is actually going to be moving up, we got back in. And that's a really good lesson for anybody who's a beginner, that you don't have to hold and hope, okay? You can cut your losses, and if the stock proves to you that it's worth running, get back into it, which is exactly what we did within the time span of just a few minutes, right? So this was 1239, 1246. So yeah, so literally 7 minutes, the faith of the stock changed. So we capitalized on that. And then it went up, and you know, there was no shares available to short. This thing has just kind of been trickling down, and you know, a bit of a, I guess, short squeeze maybe here in the after hours as people get out. Because who knows, maybe they'll drop a stock offering. Anything could happen overnight with these stocks, okay? A stock that was just $1 yesterday is not worth $40 today. I think everybody can agree with that. So, but that's our opinion. So I think, seen this right here. I think there's another kind of component we need to talk about, and that's how to prepare SPI for tomorrow. So what we need to recognize is that, you know, when there's no shares available to borrow, to short, you know, the inventories have been exhausted, which means that there is a ton of shares that have been shorted down all the way from the 40s down here now to the, I guess we're up at the 17s, but all the way down to the 12s. So the odds, again, the odds of this having a massive morning spike either on the 24th or on the 25th, or maybe in the afternoon of 25th, because that'll be a Friday, is excessively high. I can't speak enough to how high those odds are, okay? Anybody who's shorted, they have to buy back to cover, okay? So there's gonna be a spike on the stock. Of course, nobody can really tell you when, but all we can tell you is that the indicators are there for a spike. It could be in the morning on 24th, it could be the morning 25th, it could be the afternoon of the 25th when people cover before the weekend. It really could be at any point, but it's important to be on watch, to set the key level, set the right alerts so that you can capitalize on the stock when it does another push, probably up towards the 20s, 30s, 40s. Who knows where it's going to top up, but there should be another spike coming on SPI with a high degree of odds. Okay, so really beautiful trade on SPI. Let's recap one of the other trades that we took a quick loss on, and that was DSGT. So we got in at 12.5 cents and cut our losses at 11 cents on 5,000 shares. Let's talk about that as well. So DSGT. So that's an OTC play. And as you can see, these OTCs have been failing recently. And I've been talking about this in previous overnight holds as well. Like, this thing closed extremely strong yesterday. So moved from the 4 cents to 12 cents. Really nice mover, almost 300%. And even today, it gapped up. You see that? A little bit of dip, but then it gapped up to 14.5 cents. And, you know, we didn't alert this because we don't like to alert our speculative positions. You know, we don't want people to get the wrong idea and start doing wrong things. Okay, this really was a speculative trade. I can't emphasize that enough. And what we were hoping to do here at 9:42 was to get caught with the stop losses and get filled, and that's exactly what happened. We got caught in this red candle. We wanted that because we wanted to buy just off of the highs of the morning opening price, the market opening price, and the goal was to have a dip and hopefully sell to strengthen the 14s, 15s. But looks like the stock had ulterior plans, more selling pressure. And you can see, a good thing we cut our losses here in the 11s because, you know, this thing really didn't recover all too well. It just kind of consolidated. Now, who knows? This thing could run tomorrow, right? Like, this thing could very well have done its A spike, the B consolidation, the B pullback, the C consolidation, and the D spike tomorrow, on Friday, next week. It really doesn't matter. But this is on watch now, okay? So really, really important lesson on cutting your losses. And why cut our losses at 11 cents? Why such an arbitrary number? Well, it's not arbitrary. What you need to recognize that 11 cents was the previous resistance on September 22nd, which acted as new support before the stock closed at its highs. So when this thing finally showed that it can punch through that support for the first time, it was a bearish sign. So we got out. We got out at, I think our average fill was 11.24, so slightly higher than 11 cents. Okay, so whatever, nice $65, $70 loss, no big deal. Overall, between all these trades, you can stop the video and go through every single order and add up the numbers if you want, but it equated to $734 US of profits. And let's just kind of put into it, like, in what time span are we looking at here? We're looking at time span of the 9:14 to 12:50, so about 3 hours, right? So about average that out to just shy of what, 250 bucks an hour. Not that I like for you to look at the markets that way, and that's not the point of showing it to you in that perspective. But what you have to realize is, are you making $250 an hour right now for every hour that you are either working or doing something? If the answer is yes, good on you, keep doing what you're doing, then this is probably not for you. But if this is not what you're making, this is a beautiful thing, because listen, 250 bucks an hour is just the beginning. When you start scaling up, this is 2,500 bucks an hour, $25,000 an hour, $250,000 an hour, $2.5 million an hour. The numbers go on however more successful you get in this game, okay? We just keep our account size very small, very limited, so that it relates to the regular Joe, so they can see that this is possible for them, so that they can learn. If I was to trade with a bunch of thousands of dollars and thousands of shares, it would not be relatable to you, the end user who's getting this content, right? So that's what we're doing. I hope you learn from it. Phenomenal day. Watch an SPI tomorrow, the day after, and I really hope you take a great lesson away from that. Just before I say goodbye, actually, something else I want to talk about is just our relationship with our clients. So we've got several type of clients that we serve. We have the VIP clients. We have people that is following our work. They go to our workshops, whatever. The point is, we reward our clients who are dedicated. So today, we posted a trivial question to our students in our group chat, asking them, why did SPI move today? And one of our phenomenal students, Jonathan, he answered correctly, and basically he said, when Tesla moves, Tesla lifts all boats, right? It's kind of like that tide. Tesla is lifting everybody. So this is a hot sector. And Jonathan got a nice $100 gift from us. He transferred straight to his account for being a dedicated student. You see that right here, the message we gave him. Congrats on being a dedicated student. This is your reward. Keep studying, okay? So this is what our clients experience when they dedicate to the content that we provide them, okay? We reward them with money. We reward them with experiences. We reward them with unlimited content so that they can remain successful in the markets. If you want to make $100, start studying, start getting dedicated, and get in touch. Have a great day. We'll see you tomorrow.